Oh, smoke us. Oh, here we go. We got the ADP numbers coming in. The 80 pizzle numbers, here we go. Looking for 175, we get 152. Slight weakening on those ADP headline numbers. That's actually somewhat what markets have been anticipating, is that we would start getting a weakening in jobs data. That ADP employment report coming in with a weaker 152 versus the 175. Now we're going to go through the actual report as it populates on their webpage. We're looking for the May report here. Actually hasn't populated on their website just yet. I'm going to wait for that cache to clear. But let's go ahead and listen in right here as they give us a little bit of a report. Here we go.
192 to 188. And it's not really a bad job, Joe. Errors are between 48 and minus 25. So in that range of plus or minus 50. Let's take a look at how we got there. Small business down 10,000. Medium-sized business up almost 80,000. And large business 100,000. Looking at it by industry, trade, transportation up 55. Educational services, that's where we see a lot of the jobs in the BLS report as well. Up 46. Construction up 32. Leisure and hospitality, not as much before. And there's that decline in manufacturing jobs down.
Yep, look at that decline in leisure too, down to 12. Usually you're at 20 to 50K.
Getting 5% wage. That's still on the high side, but unchanged from last month. Job changers up 7.8%. That's down from almost 9% or above 9% in the prior month. It is down for the second month in a row. So we'll leave it there, guys. We'll see what it says about whether or not this suggests maybe a lighter BLS number on Friday. But It's been in the range, Joe, this ADP number.
It is, Steve. Stay right there. Let's bring in Neela Richardson, chief economist at ADP. Steve said 190 for Friday. Neela, does that sync up with what's reasonable in your view?
Yeah, I think it's going to be lower, Joe. Good morning.
You do.
This number is generally a good number, plus 150,000 or so jobs in most economies is a great number, but there is a little weakness under that hood. There's weakness coming from traditionally white-collar jobs like professional business services we saw loss, information services we saw loss. We also saw losses and weakness tied to both producers when it comes to manufacturing and consumers when it comes to leisure and hospitality. That 12,000 jobs number is lower hiring than we've seen in the previous 2 months, which have been strong. So overall, it's a good number. It's not a great number, and there's some weakness that we're really paying attention to.
The Fed probably not unhappy with maybe a little bit of cooling in the labor market. Is that the right move, Neela? I mean, will this tighter environment bring inflation down? If it's not going to bring inflation down, there's no reason to try and hurt growth or the labor market. So I hope we get something for this.
Yeah, right. What's the point? I think we're looking to see whether we can coast with our steady hiring through the summer or if the economy is actually running out of gas. Right now, the coasting seems most probable if you look at the other data. But I will note that even in weak sectors like manufacturing, we've seen pretty strong jobs growth when it comes to job changers, up around 11% if you go from one job to another, even in manufacturing. Wage growth for job changers in May is still higher than it was in January. So the pay growth is still a big part of the story. We can't count it out, and we can't count out the role of wages of keeping inflation higher than we'd like it to be.
Can you guarantee me we're going to get to 2% in the next 2 years?
Well, we know the answer to that. We don't even have to listen to that. Look at this, though. So this is exactly what we've been talking about. A slowing coming. The ADP report showing us, look at this. Job gains, it's starting. This report out minutes ago. Job gains were slower in May due to a steep decline in manufacturing. Leisure and hospitality also showed weaker hiring. This is exactly what some banks are starting to warn of as the start of, I hate to say it, but a recessionary slowdown. People are like, wait, but things are supposed to be getting better, right? We're supposed to be coming out of a hole. And that's what I've been wanting to think after all these wonderful, spectacular earnings. But again, earnings are driven by spending, but spending really halts once people lose their job or you go into recession, or both, quite frankly. Look at this. This is the S&P Global U.S. Manufacturing PMI. So initially, we're like, yay, new orders returned to growth in the U.S. in May, supporting faster expansion and growth into the second quarter. If you only read the first few lines, you'd be like, that's great. Meanwhile, business confidence picked up and positive expectations regarding the future for continued hiring, renewed rise in purchasing activity, and a buildup of stock of finished goods. Blah, 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 blah. That's great. Okay, wonderful. So good news here on manufacturing, right? Oh, but wait, let's get into some more of the details. Input cost inflation quickened to the fastest rate in over a year. Cool. So if you have a slowdown and inflation, that's stagflation, right? That's not good. Okay, what about this? Well, we saw a renewed expansion of orders following a modest reduction in April. But what's this here? While demand improved during the month, overall economic conditions remained muted. The rate of expansion was only marginal. In fact, the rise in total new business was softer than that seen for the new export reports or new export orders, which increased at the fastest pace in 2 years. Firms reported signs of improving demand in Europe alongside growth in Asia, Canada, and Mexico. Okay, so good news on that export, but weaker than expected in the US. Increase in new orders alongside better material availability led manufacturers to expand production at a solid pace in May. That's good. Firms were also confident that production will rise over the coming year, thanks to optimism that renewed expansion in new orders will be sustained in the months ahead. Plans to increase capacity also contributed to positive sentiment. Okay, so far it's kind of mixed, right? I mean, it's mostly good, a couple little bad lines there. Okay, great. What is this? Employment increased for the 5th consecutive month at the fastest pace since July 2023. Great. Higher staffing levels reflected the filling of previously vacant positions. Meanwhile, the rise in purchasing activity was the first in 3 months, but only marginal. The expansion in input buying was not sufficient to prevent a further reduction in the stock of purchases. But it at least restricted the pace of depletion to the weakest in the current 3-month sequence of falling inventories. In other words, companies just aren't needing as much product. Stock of finished goods, on the other hand, increased for the second month running. Expansion to capacity and recent muted demand conditions meant manufacturers continued to lower their backlogs of work. The pace of depletion was slight, however, and the weakest since February. The rate of input cost inflation continued to accelerate, quickening for the 3rd consecutive month to the fastest since April of 23. The latest increase was also sharper than the pre-pandemic average. Higher costs for aluminum and copper in particular, and metals more generally were reported, as were increases for fuel costs. So, kind of a little bit of a mixed bag, huh? So, you're seeing a return to growth following a blip in April, although modest, the expansion of new work bodes well in the coming months. Okay, so this is, it's like trying to be optimistic, I guess, so we'll color that yellow here. And manufacturers cited confidence, but you're seeing that stagflation potentially come alongside a slowing in the expansion of consumption. So think about that for a moment. It's kind of it's a nasty cycle. If consumption goes down while manufacturing is still going up for now, but input costs are going up, what happens when that consumption finally turns over to lower manufacturing while at the same time you have lower input costs? It's a stagflationary kind of recession. It's not great. And that ADP report we just got, unfortunately, contributes to this. Remember, they said a lot of the jobs filling that they did was just filling vacant positions. But once those vacant positions are filled, now they're full. Now you don't have room anymore for new people. It's interesting. It's not like a major red flag on the manufacturing side, but what it is, it's almost like you're starting to see some cracks, and the whole story is starting to connect a little bit better together, that things are slowing down, or at least there are some signs of red flags. Let's look at this a little more. So goods producing negative 9,000, construction 32K, that's actually still pretty decent. Manufacturing 20K, IT negative 7K, financial activities 28, 55 over here. Where's leisure hospitality? This right here, 12,000 leisure hospitality, that's low. You're usually between 20 to 50K on this number. So you're starting to see this rollover, and we're not even in the summer yet, when you're seeing companies like American Airlines say, maybe our bookings won't be as great as we thought. It's kind of interesting. And then, of course, you get some regional changes here. Small establishments down 10,000, medium up 79, large up 98. So you still have growth, obviously. This over 150K number is still decent. Those job changer pay numbers are finally falling down again from that 9%, which was crazy that we saw for a moment. But remember, Jerome Powell cast water on the idea that he was really nervous about a wage price spiral anyway. I think the biggest thing the Fed's now concerned about is that potential jobs and labor market recession rolling over. Now, of course, you have people on the internet saying, no, there's no recession now. There's no recession. There's not going to be a recession in 24. There's not going to be a recession in 25. There are some economists, which we know, economists have predicted 12 out of the last 2 recessions. But there are some who say, statistically, depending on how the numbers come in with jobs, a recession may have actually started in October of 2023. Yeah, that's crazy. So we'll see. We'll see. But anyway, that gives us a little update on the good old jobs data. And it just contributes to some of the fears of banks like Citigroup. All right. So what else here? I think, let's see here what we're going to do. How about, I have an idea. All right. Let's see. I want to see it. I don't think they have it up yet. No. No Ron Barron yet on CNBC's. But they'll upload that eventually. And so then we'll watch it when that time comes. Okay. So, what else? Let's see what they got live right now. Let's take a listen.
Chair Khan, about getting involved in that transaction.
Ooh, FTC.
So we were pleased that we were able to bring that action. That investigation surfaced what we viewed as pretty troubling evidence of attempted coordination. We know the Permian Basin has been a really important source of production for the United States, has the opportunity to serve as a competitive check on OPEC and others. And so, allegations and suggestions that there was, in fact, attempted coordination is really troubling. We're scrutinizing a whole bunch of these deals. This has been publicly reported, and so I'll reserve judgment until our investigations are completed, but we recognize the economic significance of what's happening here.
Another big case that the DOJ's suit has been brought now against Live Nation, parent of Ticketmaster.
A lot of this antitrust circulating.
Competition for the intermediary services that bring a concert to a fan, that's what we care about. And so if someone's paying a convenience fee that they view as excessive, or they're not getting the customer service they want, or an artist or a venue doesn't have the choice, if they're unhappy with the level of service that's being provided to the fans, those intermediaries are supposed to compete hard to deliver better products and services and to make people happy. And if there's harm to competition as a result of anti-competitive behavior, then that's exactly in the strike zone of what we should be focused on.
Jonathan Cantor, by the way, says that he is a Swiftie for those folks who are following Taylor Swift. And in part, a lot of people looked at this case as a referendum on.
Boring. Let's flip around here. Let's see what they're up to on Doomers.
Day, 800, 600.
Gerber Life Insurance. What is this? All right. Well, folks, I don't know. It's, I'm somewhere like in the middle of on my Kevin Bull Bear sort of meter. I haven't gone all in here, or all in on what's it called, margin. You know, it doesn't feel like that sort of environment yet, or it's like, all right, all in on everything. Scary. All right, so let's take a peek at the pre-market here. So here's the pre-market. I still have nervousness too that we're gonna have a big jobs recession. You know, I tell you, Bloomberg was talking about it yesterday. Bloomberg economists are like, you know, we might have been in a recession as soon as October 2023. That's jobs numbers. These jobs numbers are heavily overstated. Anyway, look at BTC here. You're really having trouble at the 71 1 line. This is where we double topped yesterday. And we're still having failed breakouts, 3 failed breakouts over here. You do have Tesla, which is showing at least some optimism this morning, up 65 basis points. Nvidia was as high as 1180 this morning, which just seems crazy. Actually went all the way up to 1184 in pre-market. It's quite remarkable. NASDAQ up 48 basis points. I mean, if you looked at the stock market, there'd be no problem. Everything is fine according to the stock market. CrowdStrike reported earnings. They beat on Q1. They beat on Q2 guide for cybersecurity. So they're up nicely, and they're really sort of dragging up the rest of the space, especially after weaker software data. Flipping to the downside, you don't actually have that much red this morning. You're sitting at less than a page of red in pre-market. Let's listen in here for a moment.
Pools and pools of cash. They're looking for some AI exposure. You just wonder how much that's going to be the fuel to the next leg of the fire, more than, you know, company Joe Biden.
I don't know if I'm looking for it, but I'm just noticing it more and more. Every time there's some kind of deal, our friends at Apollo are like in the story. Have you noticed that too? Paramount, Apollo's like in the story, Apollo's in the story. You see it more and more.
They're massive. They've got their tentacles in a lot of things, and they have a lot of money. And when you have a lot of money, you can't do as many, or you can, but if you need to gain scale, you need to go big. And so you start to see them as sort of a major partner for some more significant companies and some significant projects that are, you know, what are in all of our kind of eyesight, which raises the question how much of a role these companies are going to have in kind of financing that next tier of development that a lot of people have been counting on government financing for.
We're seeing it in the news flow. That's for sure. Good morning, Mark, Jim, Scott. We'll talk more about this.
Lots of shout-outs.
Shares of HPE Enterprise, they're watching, I know they are. Set for the biggest gain since 2016, thanks to what else? AI. HPE's server business generating $3.87 billion in revenue. The company seeing a big jump in sales as demand for AI-oriented systems only grows stronger. HPE finally getting a slice of the market as its peers Dell and Supermicro Computer see significant year-to-date gains. It's quite a year.
Ooh, HP's up 15.6% here in the pre-market. HP Izzles, they did just have earnings. It's always funny though, because I feel like after Dell, I'm so sus. Like, you look at these companies, it's like, okay, yeah, significant AI demand, got it. So how much are your margins going up? Oh, 0? Oh, okay, I see. That's unfortunate. I mean, I don't know. Well, that HP might be different from Dell, but Dell's numbers are not so desirable when it comes to that AI side of things, giving away these server stacks at probably 0 margin just to buy market share. It's wild. Wild.
Who it was, but I'm going to quote him because it was great. The Fed has a reaction function. The markets have an overreaction function. And the numbers that we've gotten recently have them overreacting to the idea of rate cuts. Now, that may happen. April may have been a turning point in the economy. We don't know. We don't have a lot of data yet. But at this point, everybody's buying into the idea that the Fed's going to cut rates sooner, that the economy is slowing significantly. But there's a lot of stuff on either side. You look at the JOLTS report yesterday, and everybody's focused on the lowest since 2021, but it's still 8 million, which is still way higher than the average before the pandemic. And we saw hiring go up in April by 16%, the second strongest since January of 2023. So the labor market, is it weak or not? I mean, are we going to see a strong number on Friday? ADP might suggest not, but I don't know. And The other thing I would say is we are maybe getting into this trend that we're going to see rate cuts. It's only a question of whether the Fed is joining in, because Bank of Canada today, 9:45 this morning, comes out with their decision, and they're expected to cut rates. And I don't know where you would put them in the major, minor, middle. But I expect her to defend them because Lisa is a big deal in Canada, as we know.
Tier 2. I'm going to say tier 2. What I'm really nervous about doing is putting anyone in tier 3. So I'm just going to tell you there's like tier 1, which is ECB, Federal Reserve, BOJ, and then it's like tier 2. And I'm not going to say who's in tier 3.
It's like Bs
right?
in most schools that now count as pretty much Bs, Cs, Ds, and even
Just
Fs.
everyone gets a medal.
Yeah.
Participation. All right, everyone gets tier 2.
Very good.
Mike, here's the problem. Destination versus journey. I remember this phrase from Chairman Powell, we all do, in Jackson Hole in the last speech in August when he talked about navigating the stars under cloudy skies. Help me navigate the stars under these skies. So when you look at the ratio of openings to unemployed people sitting at 1.2, so we're back down to about 2021 levels, very close to where we were pre-pandemic, all the way down to 2 to 1 at its peak. So we're talking about really hot labour market. We're trying to work out, are we just normalising, talking about 2019? We're on a journey to somewhere else, somewhere bad. How do you even know?
Yeah.
You don't. I mean, the evidence is that we are normalizing, and almost all the economic indicators suggest that we are normalizing. There are some red flags out there that people are watching, the number of bankruptcies and the number of people who are getting delinquent in their loans, but they're still not out of what would be called a normal range. The issue is, do they tip over that edge? And we don't know that. And that's one of the reasons that, as they say, economists and Wall Street have predicted 7 of the last 3 recessions. I mean, we're always looking at these numbers, and people pick some out and say we're gonna have a contraction, and once in a while they're right, and then they come on this show a lot and we tell them that they were great.
No one's ever told me that before. Literally every day someone gives me that stat. Just want to throw that out there. I will say, though, there is this question going forward about the data and then the revisions. And I don't know if I'm making too much of this or not. I know Bloomberg Economics came out with talking about a potential 730,000 jobs eliminated from the labor force as reported in all of the revisions for 2023. Do you buy into this credence, this idea that the data's been messy? We've seen some pretty significant revisions in the past. It's been harder to get it right, and they're more likely to be in a significant downward trend than upward.
I was looking at the what they call the QCEW numbers this morning after that piece from Bloomberg Economics, and I don't know if I buy that we're going to have this massive revision, but certainly the data has been very messy. Ever since we got out of the pandemic, it's been very hard to know what the final number is going to be, because all of the seasonals have been interrupted and the patterns that we had have been interrupted. And you see data after data being revised more than they usually are. But it goes back to what's the ultimate goal here of everyone watching this data is to predict what the Fed's going to do. And the Fed can only deal with the data that it has. So you can look at the revisions, but you have to take the data that we have at face value when you're trying to predict what the Fed's going to do.
That decision, a week today. Let's bring in the panel. Tom Porcelli of PGIM, alongside BlackRock's Marilyn Watson. Marilyn, first to you. Let's go to the calendar. Later on this morning, we all know what we're looking for, ISM.
You know, it is going to be really interesting. The jobs data will come out on Friday, but I don't think we really expect to see, like, really scary jobs data. You know, whether it's unemployment claims tomorrow, that's usually lagging, or the jobs numbers Friday. I don't think we'll start seeing major rollovers there. Obviously, that would be bad if we were, but I think really this data we're getting right now is May data. You're probably looking at more like July or August before you really start seeing a rollover in data right before the election. And if you start seeing this job growth go down to, 100,000, 50,000, then you start getting revisions, you start going negative, I don't know. It's not good. It could drive the Fed to cut quickly, but my concern is, if the Fed starts cutting because of a jobless recession starting, is it too late?
The stat you highlighted, Jonathan, is spot on, right? If you look at the ratio of openings to unemployed, you're basically back to where you were pre-COVID. But what keeps it there? And I think what would actually help keep it there is for the Fed to start the process of removing some of the tightening. And I think that's the real sort of real challenge for them. I mean, when I look at, it's funny, the QCEW, which you mentioned earlier, to me, this is like one of these great metrics that no one really pays attention to. I mean, and if you take it at face value, which is basically used in the benchmark, right, revision for payrolls, it would suggest up to, 50,000 less jobs per month, right, last year. And that's not a small thing. And again, it doesn't, the smoothing of that is a little trickier. But again, just taking it at face value, I think it suggests that you're going to look at actually some lower numbers in the, for last year. But I think thinking about where we are right now, I think what we have to keep in mind is there are an assortment of data that actually are suggesting that things are looking a little softer from a labor market perspective. Now, look, let me hasten to add, I think on Friday, I think you could probably see about 200,000 jobs being created. But when I look at something like, the small business survey, hiring intentions there, which, by the way, is comporting with actual data, hard data on what small business are doing from a hiring perspective, which is to say it is lower. If I look at something like the labor differential from the Conference Board, which is also deteriorating, which, again, soft data, which is comporting with the hard data. The unemployment rate is up modestly, but it's up. So there are things that are actually suggesting that labor is slowing, and I think this is where the Fed comes into play, and I think this is why the Fed wants to start the process of taking back some of that tightening that they put in place.
Messy data was blamed for what some people say was the Fed error in 2022 of not hiking rates sooner. Do you think, looking back, that some of the messy data that's going to be revised heavily will be viewed as the reason for another Fed error, that they didn't cut soon enough?
And Lisa, I think that this is what's on the Fed's mind at this point, and I think this is why they actually want to start. Look, I think if we just take a step back, I think it's very easy to say that, you think about Powell and what they were trying to achieve. They stopped hiking rates in July when core was at 4.2%. I think that whole process, that whole thought process was built around, let's try to limit the downside from a labor market perspective as much as we can. And so I think that's already on.
Well, that's the whole point, is like, hey, if you can catch a labor market slowdown coming sooner, then what ends up happening is you want to start cutting rates sooner, and then maybe you could sort of like arrest the free fall collapse of jobs. Who knows? It's going to be really interesting. But take a look at what we've got here. This is the Qs in the stock market, which this morning just honestly doesn't give a flying hoot. It's up, 57 basis points. So what do they care? Then you've got let's see, we got Tesla. Look at it bounce right on that 175.60 line. Pretty important line for Tesla. Apple's trying to get to all-time new highs. I think when do we hit all-time highs? 199.10. So you're on that sort of breakout path. You've got Nvidia contributing to this insane rally over here. Some people are calling this a potential blow off the top pattern. Just that, if you haven't heard of that, it's basically when you go up sort of parabolically and then you just have this massive kind of collapse, right? So it's really interesting. You've got, let's see here. Let's see, Crown Electric, Faraday, these guys are down 14 and 8%. So some of that momentum wearing away. And still only less than a page of red here. CrowdStrike 11% on their earnings. Hewlett-Packard basically trying to play the next Dell. You're going to see that, by the way. Like, a lot of people are like, all right, where's the next Vertiv? And then where's the next Dell? That's not highly uncommon. Anybody know the PE? The PE for Nvidia? The forecast PE for Nvidia is like 43 right now. I actually did a video on Nvidia yesterday, which I encourage everybody to check out if you haven't seen it yet. What I did is I compared Nvidia's valuation to Cisco. And there's some major differences because a lot of people are trying to compare Nvidia to Cisco and say, oh, Nvidia is just a bubble that's about to pop or whatever. And so my goal is to just sort of give a neutral kind of explanation on where there are similarities and where there are differences. And I think it's useful to watch and listen to. And so you'll see that if you just type in Meet Kevin Cisco, Nvidia, it'll come up right away. But yeah, Nvidia's pegs probably somewhere around 4 right now, just because their earnings growth is expected to be only about 10% for the next 4 years after this year, which makes sense that you get sort of this like giant explosion in growth, and then that growth level rotates down. But again, you'll see more details there. So, all right, very well. Okay, so let's see here. Somebody has an idea here. They say they use SQQQ shares as a hedge, and then they're riding Nvidia in the meantime. It's interesting. Yeah, if you had sort of a systemic shock, SQQQ could do really well. And then you've got some more of that sort of concentrated bet placement, so to speak, on Nvidia. I mean, look at Nvidia for a moment. I mean, you've just been straight up since earnings, really. You know, earnings, you broke that 1116 number. As soon as you broke 1116, it was almost just like every day, almost every day, it just felt like it's up, it's up, it's up, it's up. Just keeps going and going and going. It's kind of remarkable. So we'll see how that plays out today. I get a little nervous when you see numbers that just keep going up and up and up like this. You know, it's not like I'm calling, for sure it's going to crash tomorrow or whatever. You know, the market can keep playing this for quite a while. You know, you could even go extreme, and maybe it's not even that extreme to say, but you could see Nvidia double, before any kind of sell down. Like, nobody really knows. But at some point, it does, the growth in the stock price will end. We don't know when that is. So, anyhow. All right, what do we got? Let's see. What else is there? What are the doomers on now? Are they still talking about jobs?
Marilyn, your thoughts, please.
Excuse me.
So, I mean, we certainly think that rates will remain higher than the market expected and higher than they have been for a long time. So even as the Fed does start to cut and as the ECB starts to cut, we think it's going to be very, very gradual. And as you know, there's been a huge debate around where our star is. We need to see inflation come down in a sustainable way towards, the various central banks' targets. And it's not there yet in most cases. And so we do think that rates will remain higher than they have been for quite some time, and certainly higher than has been expected both by the central banks themselves, whether it's the summary of economic projections or other things as well, then maybe and also certainly than the market had been anticipated.
Marilyn, this was great. Marilyn Watson there of BlackRock, alongside PGIM's Tom Porcelli. Tom's going to stick with us and get some final thoughts from him on a payrolls report. I happen to agree with you, by the way. I expect a ton of research between now and November that's going to mention things like Liz Truss moment, UK, what happened to the gilt market a couple of years ago. Can it happen in this?
Boring. That was funny. Liz Truss. Remember when they put her against the lettuce head? Like, who's going to survive longer, the head of lettuce or Liz Truss? And lettuce head won. That's probably one of the biggest trolls I've seen in politics. That was a good one. Oh, I missed that. Yeah. So, ooh. All right. So, what else? 71. This is the number for BTC today. Watch this. This is either your omen or your omen. Wait, isn't an omen always bad? Hold on, let me see. If an omen's always bad, what's the opposite of an omen? Ooh, define omen. Oh no, an event regarded as a portend of good or evil. Okay, so I feel like colloquially, though, it's always negative. So what if I go to thesaurus? Oh my gosh, I spelled it right. Omen. Harbinger. Harbinger would be bad, right? And then premonition. Isn't that always bad? No, that's just a hunch. Right. Oh, okay. Harbinger, that one's usually bad. Okay, so where's the... I need the opposite. What do they call those antonyms? I should just be using GPT for this. All right, let's try that. I need antonyms for, quote, omen, end quote. There we go. You know, I was reading yesterday that a lot of queries could just be cached and actually significantly reduce the need for artificial intelligence chip compute, because you can just cache a substantial portion of responses. What's it called? You know, let's say you have 10% of queries that are just like, define something or tell me about someone or some event or about a medical condition. And you could just provide a cached response to 10% of queries. Well, technically then you'd probably need like somewhere around 10% fewer chips. It's kind of interesting. Okay, the antonyms per GPT for omen would be certainty, security, good fortune, luck, bright future, promise, guarantee. Promise. Those aren't that good. This is not really a good one. Anyway. So... yeah. Okay. So, what else? Let's see. I don't know yet. I'm gonna get some more data. Oh yeah, what data? What other data do we have coming up? We have S&P services and composite PMIs, ISM services. Those are all coming out today. Coming out between 6:45 and 7. All right, so you probably want to wait for that before entering trades, unless you got like cojones of steel. And then tomorrow we'll get continuing claims, which we think will be around 1790. And then we'll get payrolls on Friday. Oh, it's going to be entertaining.
He can spend...
Oh, Barry. This is the guy who's locking up some of those real estate funds.
On the amount of the debt rolling just this year. Half of our debt will roll in the next 3 years. So that's number one. The federal government's the biggest victim of his own problems.
Here's my argument with Powell is that he can only do so many things. He has two mandates. One is the inflation rate, the other is unemployment. Those are the two things he's supposed to be watching. You're right that he has a limited toolbox in what he can do.
Very limited.
I don't know that this is a fault of Jay Powell and the Fed, or if this is just there's only so much they can do, and there are all these other forces that are adding up.
It's a tough job, and with Congress spending money the way they are,
that would be my...
It's not, you know, again, one arm of the government has their foot on the accelerator and the other one on the brake.
Yeah.
And usually things explode when that happens. The engine wears out. I hope it doesn't explode. I mean, the U.S. economy is being powered productivity. A lot of jobs are part-time. They're not full-time. But I think he just has to be careful. And I think because of the housing market with 4 or 5 million home deficit, and that is the biggest component of CPI, this deficit that he's making ever bigger because housing starts are falling and we're not building as many units will show up in a couple years with higher rent growth than he ought to have. He ought to smooth it out, lower rates, increase construction. But, you know, he's got it. It's a tough thing. And then you have the regional banks. And don't forget, that's the second.
He's begging for rates to come down. Begging for rates to come down. Kevin, you have a donation question. Ooh, I missed it. Oh, here it is. Do you believe inflation will be the key catalyst? Many home are single income compared to the 08 crash. Do you see bank failure being a catalyst? We're seeing this. I mean, I think bank failures are going to happen. There are too many banks. There'll be more bank failures. The rates will start coming down to try to alleviate some of that stress. I don't know that it'll be as bad as what we had at the beginning of 23, but there'll certainly be more bank failures. I don't really think inflation is going to be the biggest catalyst. I think it's jobs. I think the inflation situation will just sort of gradually fade out. Unless you go into a recession, then it'll rapidly fade out. But now we got to listen to this interview. Thanks for the Canadian $10. And we've got to listen to this here. Oh, why is that not working? This finally posted, so I'm excited to see this. This is the interview between CNBC and Ron Barron. A lot of folks have been sort of waiting to see it post. They did it pretty early this morning, like an hour or so ago. We know Ron Barron's in favor of Elon's stock comp plan, but I think what you have to do before you listen to this is you have to know what Ron Barron's goal is going into this video on Tesla stock. You ready for it? This is it. Intro song. Cue it.
You got to pump it up, don't you know? Pump it up. You got to pump it up, don't you know? Pump it up.
You know, the price I could never have bought them before. He was
the markets and much more. We want to welcome billionaire investor Ron Barron of Barron Capital, the chairman and CEO there. And Ron, it's always great to see you. Thank you for coming in today.
Judy said, "Don't use the word billionaire."
You didn't. You didn't. Unfortunately, we did because we have to call it like it is.
All right, multi-billionaire. Fine.
Yeah. There you go.
So before we talk about this, I just want to know, did you guys see over the weekend the article on the front page of the New York Times? Do you read the New York Times at all?
No.
Yes, I do.
So passing by a newsstand, you could have seen
needles in my eyes.
You could have seen it. And basically it was talking about how Elon has brought the internet, broadband, satellite to the Amazon in Brazil. Brought the Amazon. People don't have clothes, and now they have the Amazon. Now they have the internet. Unbelievable what he's done. Unbelievable, changing the world.
You know, it's been a big deal in Ukraine too, on the war front. Hey, before we jump into what you think about Tesla and the pay package, whether you're going to vote in support of that, why don't we talk about how much you own? Because I was looking, and it looks like I've known you've been a very long time holder. Some of your funds own 2.7%, 3%, 2.8%. The Barron Partners Fund is almost 30% long position in Tesla. So you are a massive shareholder.
It's also $13 cost. So, you know, so we've owned it since 2014, 2016. Between 2014, so I met him in 2010. Mm-hmm. 2014 and 16, it took me 4 years. He said, "What took you so long?" 2014 to 16, we invested $400 million, made about $5 billion at the peak. Now we made about $4 billion, sold about a quarter of our stock 3 years ago.
How much do you hold now, though, in total? How many shares?
I don't remember the number, but it's a big percentage of our assets. It's 7 or 8% of our assets in total.
So what do you think about this pay package? This is a pay package that shareholders approved once this Delaware judge has overturned it, and now it's going back to the shareholders again. How will you vote your shares?
We're voting for the package. But before I talk about that, there's 3 things I want to discuss with you today. Number 1 is contracts, of course. Then I want to talk about Elon's ecosystem, you know, all the different things he's doing. And then Elon, I want to talk about that and what he's accomplished. So about the contract. So first of all, he was, you know, when we started, these numbers are pretty cool. When we started, when I met him in 2010, they were doing 2,000 cars a year. And then in 2014, I was 31,000 cars. That's when we started buying. In 2016, 76,000 cars. And last year, 1.8 million. So significant growth. And he made promises, if he met these metrics of EBITDA, of revenues, of market cap, that he would get this extraordinary compensation. And the compensation, when he started, when the contract was signed, it was the company's market value was $53 billion. Mm-hmm. It got as high as $1 trillion. It's now $550 billion. I think in the next 10 years, we're probably going to make 4 or 5 times our money again in Tesla. So he's created tremendous wealth for people, and he was paid, if this contract is enforced, which I think it should be, he's paid $56 billion. So it's like winning the lottery, you know, and Joe was talking about before, you win the lottery, you don't tell someone, "Oh, I'm sorry, you won so much money, you have to give it back."
I remember thinking at the time that the compensation deal was a crazy setup, but I also remember thinking at the time that I never thought he'd hit any of the metrics.
No one
He's
did.
hit every one of the metrics, so it's hard to imagine taking.
Here's what I'm hearing from Ron.
I said, "Man, if he hits this is fantastic, we're going to do so well." And again, I mean, he should have another contract going from this point going forward, where it's incented the same way, I'm hoping. So number 1, the contract. So 73% in 2018, 73% of the investors approved it. All of the disinterested parties who are directors, they approved it. And the people he has who are directors, these are not just flakes. They are Larry Ellison, one of the wealthiest men in the world, Hiro Mizuno. He was the head of the Japanese pension fund, the largest pension fund in the world, $1.5 trillion. Kathleen Thomas, Walgreens, Boots. So he had really, and of course, Robin Denholm, who came later. But they all approved this, and they all thought this was a fair, a fair agreement. So basically, number one, all the disinterested directors approved it. Number two, that's the will of the company. The will of the company and the will of the shareholders. So I think he should be, it's a legally binding contract. And then who sued? You had an individual who was a shareholder for hire with 9 shares. 9 shares sued. And it took him 5 years to get the derivative suit certified.
This is a little boring.
So he doesn't really represent all the shareholders. And the lawyer who represented them, when you talk about getting lucky, he has applied to the court for payment of $5.6 billion. $5.6 billion. And then he is asking for the payment to be made in shares of Tesla stock, which are depressed because of this lawsuit. It's crazy. And so I think that, it's really unfair the way they're addressing this, and I think that he earned it, and he deserves it, and he should be paid it.
You've said for a long time, when we've asked you what your biggest concern about Tesla would be, is the key man theory, that so much is riding on Elon Musk being there. If he's not there, you don't think the company is worth the same. So what do you think happens if this package is not approved? What will Elon do?
I can't see inside of his mind, but I know that he has created tremendous value for everyone. I know he has a big stake in Tesla. But when I started in business in 1970, one of the people who really helped me at the very beginning of my career was Jay Pritzker. He's Tom Pritzker's dad, and he's the founder of Hyatt. And we were talking about arrangements, and he said, Ron, if you need to have a contract, then you're doing business you're doing business with the wrong person. You can't rely on a contract to do business, and you have to. He's a handshake guy. So if I say I'm going to do something, I do something. We said, as Tesla as a company, Elon, if you perform, this is what you're going to get. How are you going to go back and renege on that, especially when all the directors and all the shareholders approve it? It's crazy.
Okay. Well, that was really boring. Sorry. Right. Thanks, Ron Barron. Anyway, somebody here says, have you seen the news about the Texas Stock Exchange backed by BlackRock? Yeah, and Citadel. All it really does is give listing firms more options for competition, and it probably lowers costs to get listed. I don't think it has really any impact for the consumer, so I don't really see it mattering. But it would bring more revenues to the state of Texas. In fact, when I ran for governor in California, one of our campaign promises was a California stock exchange to keep California businesses in California and keep them listing in California, and basically, fix California, and that was one of the ways. So yeah, that doesn't surprise me to see, Texas being that venue of choice now. It doesn't surprise me at all. But does it really matter? No. No. Eventually, the BlackRock exchange will be tokenized. I mean, you realize there's virtually no difference between a token and a security, other than the fact that it rests on a public ledger. It's really what you're helping with tokenizing stuff is you're helping with liquidity and some transparency. But in terms of ownership, there's really no difference. If I own a grant deed on a property, or somebody grants me a property and I own that piece of paper, or I get a token that represents that piece of paper, it's practically the same thing. So yeah, I mean, in the future, sure, can we use blockchain technology in finance? Of course. And would it be an improvement? Yeah, absolutely. Does it really make a practical difference? Not really. All right. What else?
Corporate governance, given, the contract was disallowed by the Delaware court, it's going to be...
Somebody says transparency is a major improvement. Well, not really. I mean, like, by saying transparency is a major improvement, you're implying that you're going to be able to see, like, literally everything that... And the reality is you're not getting probably any more information than you can get on order books now. Sure, yeah, you can, trade longer term, but they're already thinking about doing that with the existing system where you extend the hours of stock trading. But, Robinhood's already doing that to some extent. This is the idea of transparency. I mean, you don't know who a blockchain wallet address is, right? I mean, there are plenty of ways to actually be less transparent. So, can't ban someone from the blockchain. Well, sure. But if you are on a regulated exchange, then you absolutely can. So, it doesn't work that way.
It's a legally binding contract.
Oh, we already saw this. People are like, oh, it's a major cost improvement. It's not going to change anything for you. It just means other people are going to make more money. I don't get it. It's not going to make a practical difference to your stock trading.
When you're evaluating your stocks, why is a stock inexpensive? There's usually 3 or 4 reasons. We're looking at things on a 3 to 5 year period.
Frank says you get instant settlement versus T+1. They're going to go to T+0 with or without blockchain. Like, you're going to go to T+0 eventually anyway. And sure, you get a little bit more liquidity when you're day trading. Come on, man. Whatever. Like, I get it. Like, I understand. See, I think that's what people that don't realize about me. Like, I get it. Yay, instantaneous settlement. It's going to be a great innovation to the accounting system. Yes, it'll lower costs. Okay, lowering costs doesn't affect you. Unless you're day trading and need those funds instantaneously, which the reality is the vast majority of the time, I'd say 90+% of the time, you don't. Instantaneous settlement isn't going to make a lick of a difference to you. So the costs probably aren't going to make a difference to you. Other people are going to profit more. Transparency aspect is really a misnomer because you don't know whose wallet is what. You're not going to have this idea that, well, you can't get banned from the blockchains. Okay, yeah, try that with a nationally regulated exchange. There's no way. The policies of the exchanges and regulations will always still exist. So yeah, T+0 is going to come. And I think blockchain is a fantastic financial innovation. But how much of a practical difference it makes? I don't know. I think there's some delusion going on in terms of how much of a practical difference that makes.
Yeah, so I run one of our large cap value funds, so I think individual stock picking.
You bypass the middleman fees. Good luck. Not with all the regulation that you have. It's not happening.
Is key. Now that interest rates have moved up over the last 2 to 3 years, I think it's even more imperative because now that money's not free, people put more emphasis on those near-term cash flows. So I think as we move out over the next, 5 to 10 years, assuming inflation stays in this 2.5% to 3% range, that's usually a pretty good backdrop for value, although it's been a little bit challenging recently with AI and the GLP-1 stocks. But I think it's a good backdrop, but it's a stock picking backdrop, and it's not a momentum backdrop. So if you look, if you're going back 20, 30, 40 years looking at history.
It's interesting. I mean, the broadening out is something we've been talking about a lot. The S&P 493 or 492, I guess, if you consider 8 stocks to be magnificent. Is it important to see rate cuts, or because you don't see any this year, right?
Well, I think we came into the year thought we would maybe possibly see 1 or 2. With that said, the economy's been more resilient. So the lower end consumers weakening a little bit, but not that much.
Yeah, just wait until they lose their jobs. Then they'll weaken a lot instantaneously. I think it's, I made a video on this morning. You can see it on the channel. But I've said it before. I'll say it again. I think it's hilarious that you have so many people that are like, oh, well, the economy must be fine because the consumer's doing well. Okay, but what you really should be paying attention to is jobs. Because guess what happens? When you lose your job, consumption stops. Think about that for a moment. Like, I know people that are spending money like crazy because they have jobs and they're buying stuff they should never be buying. What happens if they lose their job? Well, now they're sandbagged with a fat monthly payment or whatever. And now you're really screwed. And then consumption goes to zero instantaneously. So it's like jobs first. Then the consumption goes to zero. But the crazy thing is, by the time we realize there's a problem in the jobs market, it's already too late. So, it's nasty. Now pricing in 1.85 rate cuts by December, coming up on 2 there. For November, we're pricing in 1.15, but we're still only pricing in 0.8 for September. So, we'll see. We shall see. If AI takes away our jobs, where are we going to go in our self-driving cars? Well, the utopian ideal would be to consumptive activities. But again, if you don't have a job, if you're not making money because you can't provide value, then what are you going to consume? You don't have anything to consume with. I don't know. Yeah, ASML's up quite a bit. Let me see what's going on. ASML. Somebody's calling me a Debbie Downer. You know, it must be hard to not want to hear reality. All right. So, what is this? TSMC to get first. ASML. What is this? Some new product. Okay, yeah. $380 million chip machine to TSMC. This is one of their latest machines to... that's great. I thought Intel was going to get that first, but I think Intel's not doing as well. So, let's see here. Let's see. I think next, let's take a look here. I hear that Gary Gensler is going to come up on CNBC soon, so we'll take a peek at that soon. We'll see what he's got going on. And then, yeah, ASML, let's take a peek at it. ASML. Yeah, 6%. I mean, it's remarkable because you kind of just keep pushing to these near all-time highs, and you're going to be going up to about here. Gosh, from 950 up 6%. I mean, I've got exposure to this, so like I'm not complaining, but like at some point I just feel like you're just blowing off a top. You know, I mean, I don't know what that pattern could start looking like. I have no idea what stock might be looking like, that sort of pattern. I don't know. All right, what's going on with GME today? Down 45 bips. You know that option contract that Roaring Kitty has at $20 here. It's come down a bit. It's down at, if I were to buy it, what's our ask? Call it midpoint. Midpoint 835 now. You know, it's lost about half its value from the peak there Monday morning. Yep. I saw that IKEA hiring people to work on their virtual store. I think that's more of just sort of like a joke than anything. Yeah, well, listen to Gensler. They're on commercial right now. We'll watch it. I know some people want to hear him, some don't. All right. That's on SDOW. I don't even know what that is. I don't know what that is. SDOW. Oh, Ultra Pro short Dow 30. Oh, so you short Dow 30. Yeah, I mean, stuff like that helps you if you have, like, systemic risk, right? Like, the sudden pricing in of a recession. But, I mean, these are some of your most profitable companies in America. I mean, the way that bet works is if you go into a recession. But beyond that, well, that makes sense. SDOW. Oh, I just got that. I haven't seen that one before. I think I'm so focused on the Qs. Yeah. But that's interesting. But yeah, again, that helps you. Let's see. Oh, what is this? Are there companies that people pay to help them find a job? What? recruitment firms. All of the job placement firms have been freaking out in their earnings calls. At least the ones we've been reading. We're just like, I'm looking at them going, I don't know, man, that's scary. It's the forecasts they're giving are just like in the toilet. Okay, I think we have Gensler coming.
When we come back from a commercial, we can have a conversation all we want. I don't know. Maybe we should actually go right to it. What do you think?
How many people view this?
Millions.
Millions.
Gensler.
So joining us here as millions watch on Post 9 for holy cow. Our first on CNBC interview with SEC Chair Gary Gensler. Mr. Chairman, good to see you.
It's really good to see you, Jim.
All right, let's get right.
I like your real estate here. It's
You
a
like
really
it?
nice set.
You never been with us here, I know.
You can rent it out. I mean,
usually you join us.
Well, how much? I mean, your landlord's sitting over there, Jeff Sprecher from the New York Stock Exchange.
I don't know. We're
Yes,
moving
he
to
is.
Texas. I don't know if you knew that.
I don't think he wants you to move to Texas.
No, I thought that was so good. There's really a lot of freedom there.
Cancel the plans to go to
Yeah.
Dallas.
Remember
yeah.
the Alamo, okay?
I got it.
All right. All right. We've got Dallas. All right, maybe even to more serious things than that. You're up here to talk about something that I think we all wish had happened a long time ago, which is T1, and I thought you should explain because it means a lot to our viewers without them knowing it.
Look, this is a really good thing. If you sell your stock on a Monday, you will get your cash on a Tuesday. That's the easiest way to think about it. And in the past, just a week or so ago, it took 2 days. If you sold your stock on a Monday, you got it Wednesday. So we worked at the Securities and Exchange Commission on a rule to shorten that settlement cycle because today's technology allows that. But here's the interesting thing. We're just back to where we were in the 1920s. There was actually, if you sold your stock on a Monday in the 1920s, you got your cash on a Tuesday. And because of everything going on, they lengthened it all the way to a week, and we've had to slow walk it back. But everybody worked well together. The stock exchanges, the custodians, the clearinghouses, and this thing works smoothly. Mexico and Canada, Argentina, Jamaica all joined us. I'm really proud of the work of the SEC, but it was a collaboration across industry.
The one thing I worry about is I'm very close to Nvidia, and Nvidia created me. Very easily, it created me. It created my voice, created my face. Basically,
So are you human or are you just artificial
We
intelligence?
wonder sometimes. David, am I human or am
It's
I?
unclear. You may be a simulation.
I'm a dollar sign represented by a man.
That we know.
Yes, and Mr. Musk once said I was a simulation, so I can't be sure. But what I think is interesting is that you are very worried about AI and the power of it. And I know that you have to think.
I think that artificial intelligence is the most transformative technology of our time. And I talked about the 1920s, then it was the automobile, electrification of the whole economy. But now we're taking human decision making and more putting it in the box, in the algorithm. So I think that's transformative. It's a good thing for capital markets, but it also raises real risks of conflicts. What if the algorithm is, in essence, trading against you? Risk of fraud. What if the algorithm is trying to defraud you or mislead you? And also risk, if we're all reliant on one or two models, then the whole capital markets might basically, drive off the cliff together. And
but you're aware of that, and you can protect us.
Jim, fraud is fraud, and so
Okay.
somebody shouldn't be doing fraud. But these are more difficult challenges, more real challenges, and the conflicts are real too.
Okay, well, let's try to figure out what fraud is fraud. Let's say I buy a lot of contracts. Like use random stock. I buy contracts that are options on GameStop. I then publish.
This is just a hypothetical. Jim?
Totally hypothetical because
I see.
I don't want to. I don't want to really try to hurt anybody.
Why not? Can't we just ask about Roaring Kitty? I mean, why
okay,
wouldn't
well,
we?
if someone publishes.
Dave, you ask about a specific thing. I just want to talk to your viewers for a second. The SEC runs a civil law enforcement agency. We're a cop on the beat, and you would expect us to investigate where we investigate, but we don't talk about it publicly because we follow the facts and the law, and only if we think there's something to bring in front of a court do we then talk about it publicly.
Hence how hypothetical. Let's say You're Paul Weiss, you're my lawyer, okay? I say to you, look, I want to put up a cryptogram, and it's of a chair leaning up, which we know from video game playing means, come on, this is the 9th inning, get ready. And we know that I'm a person who happens to like the stock of GameStop. This is the signal. Come on, get ready. Is this something, hypothetically, that the SEC should worry about?
So, look, again, it's not so hypothetical because you're describing things that are in the public domain and the public is interested in. So, but generally speaking, you have to make sure that you don't mislead the public and that you don't in any way do things in the markets that may be manipulative or misleading. And so that's the key thing in our capital markets.
No, the key thing is if you can cure it with disclosure. This is Brandeis. You know if they disclose that this is something that a call to action, then you can't go after them.
Disclosure is one really key part of our capital markets. When you buy the stock of a company, you expect that they give you full and fair disclosure. That's, by the way, not what you're getting right now in this crypto field. So I just, cautionary tale there. That disclosure. But disclosure doesn't necessarily protect a bad actor if they're manipulating a market. You can't just simply disclose that away,
Okay, so
particularly if you're misleading the public.
Not cured. Disclosure not cured. Very good.
Can I ask a broader question about the public markets? Because it comes up a lot now, in particular sometimes from those who are actually very active in these very large private markets. But the idea that our public markets are broken, that we have 7 companies that represent 30+%, for example, of the market cap, that we have far fewer public companies than we did 10 or 20 years ago. I'm curious how you think about that and whether you agree or disagree with those who would argue that the public markets don't work the way they should.
Look, I believe deeply in competition, and we in the U.S. benefit from very large capital markets, which are 5 times our banking system. $23 trillion banking system, $110+ trillion capital markets. Not Europe, not Asia, that competition. But I also believe in competition between public markets and private markets. Maybe it's because my dad had a small business of 30 people. Maybe it's because I did work at Goldman Sachs that when I was there, and Jim, you were there.
Yeah.
Yeah. You were on a different floor.
No, I wasn't on
time.
a different floor. I was on a better floor. Higher paid.
Don't lose track here. Don't lose track.
Sorry,
But I really do think that public and private can compete with each other and benefit the American public. The key is to make sure that there's standard rules, that people get the proper disclosure if you're investing in something, that basic bargain. They get full and complete information on material aspects of the companies, but also that the capital markets, like this here, are operating free of fraud and manipulation.
But what about the private credit markets? I mean, they've grown enormously, for example. There is, you could argue, a lack of transparency, but that may go along with it because you have typically a contract between one borrower and one lender.
But there what we have is we have competition between private provision of credit and the banks. And generally, that's a competition that we, promote. Now, at the same time, do we have to make sure the investors in those private credit funds are getting, the disclosure they need and they're not getting misled and so forth?
You have a really active following on social media. When you posted yesterday you'd be on, tons of replies. And
thanks. Did it help your viewership?
We'll see.
Well, that's why we're talking.
The 2 issues that I saw they wanted to learn most about was the timing of the Ethereum ETF approval and
I think that happened a week and a half ago.
And what pressures you felt to make that happen. And then second would be trading patterns among members of Congress. Can you talk about the 2?
We have in the U.S. already a way that you can invest in various underlying securities and underlying commodities called exchange-traded products. In January, we approved an exchange-traded product on Bitcoin. And about a week and a half ago, similar filings to list on the New York Stock Exchange, list on NASDAQ and the like, exchange-traded products. on Ethereum. Ethereum had been traded on the Chicago Mercantile Exchange futures for 3+ years, and the staff looked at that closely, and that was approved. Now, the underlying exchange-traded products still need to go through a process to have the disclosure about that, and that will take some time, but they're working on that right now.
And how about congressional trading?
Well, look, everybody in the markets, 330 million Americans, should understand that you have to play by the rules of our capital markets. And one of those things is that when you trade, you don't trade on what's called inside information from a company that it's not made disclosed to everybody else. But the same rules apply to all of us to make sure that we do right by the law.
So we could conceivably investigate someone for inside information who's in Congress.
Well, historically, that has happened in the past.
Okay. Now, Polkadot, Cordana, Cosmos, Immutable, Ronin, Bonk, Osmosis, Sushi Swap, My Neighbor Alice have all traded millions. I'm talking about millions of dollars this very morning. Now, should we have a Sushi Swap, maybe an ETF, or the proprietary kind? Just I would think that Bonk is a natural, and Osmosis. These are trading Gary, these are millions of dollars. These things are traded. Shouldn't we have it? Shouldn't we have some sort of product?
Let me say something more broadly about the crypto markets. Right now, without prejudging anyone, these tokens, whether they're the ones Jim listed or other tokens, have not given you the disclosures that you not only need to make your investment decisions, but also that are required by the law. It's a basic concept.
How often he just looks at the camera as opposed to Jim Cramer.
Turning 90. Happy birthday, SEC. 90. And what President Roosevelt did is he created this commission to oversee that you, the investors, get disclosure. And in the crypto markets, they aren't giving you that disclosure. And secondly, that exchanges, like here, this floor of the New York Stock Exchange, get properly regulated to protect against fraud and manipulation, and they don't trade against you. And these crypto exchanges, Jim, are doing things we would never allow this New York Stock Exchange to do. Our laws don't allow you to trade against your customers. And so you've seen the bankruptcies in this space. And there are some of the most leading lights in this field are either in jail, about to go to jail, or waiting extradition.
Okay, that's a suboptimal situation for them, but I'm looking at the...
But it's a suboptimal situation for investors. You're investing in a field right now that you're not getting the proper disclosure.
I agree, there's securities for people actually I know. I mean, their names. And there's nothing... You know that, too.
That's funny, yeah.
I mean, some people even in this room have their names attached to a coin for no reason. Makes no sense.
I'm sorry, you guys have coins?
No, we don't.
There's a Kramer coin?
There should be, but there isn't.
Yes, there is a Kramer coin.
I hope it's properly registered.
Well, I wasn't going to bring it up because now it's a pump and dump. But like, wow, Kramer coin. I was not going to bring it up, but there you go.
Chair Gensler, wait, we have only a little bit of time
The
left.
SEC versus Ripple Labs.
Right. Dave, what do you want to ask?
There you go. I've got the floor.
Thanks.
What I want to ask is, I used to text a lot of my sources, and now they say, please don't text me at that number because we've already been fined by the SEC. It's the personal use of personal devices for work. Many describe it as a money grab. It's tens of millions in fines you guys have leveled at this point.
It's actually something quite different,
And it frustrates a lot of people who say, come on, this is ridiculous, especially during COVID. How could you have expected us not to use our personal devices for some work?
Dave, it's very simple. For the SEC, for your cop on the beat to do its job, companies need to keep proper books and records. And this goes back to the 1930s. This is not a new thing. And when banks or brokers...
This is a little boring. We're almost at the bell.
...keeping those books and records properly, then we can't be that proper cop on the beat. But what's more, the broker-dealer can't actually manage its risk. It can't properly manage its risk. So even when I was on the Wall Street, and Jim and I were both at Goldman Sachs, we knew that they actually recorded the phone calls on the, and they kept the books and records. That's what this is. And we found a lot of the big broker-dealers and banks were not doing that. They were doing off-channel communications. And I'll tell you this, when I was served President Obama over at the Commodity Futures Trading Commission, one of the big things that we saw, there was manipulation in the foreign currency markets, and people were doing it in off-channel communications.
All right, well, look, I hope you'll come back because it's a delight to have you. You're very clear and clean up a lot of things that I know I didn't know. So I want to thank you, Chair Gensler, for coming on Post 9.
Thanks, Chuck. Good to see you. Let's get the opening bell and the CNBC Real-Time Exchange. And the big board, it's Centuri Utility Infrastructure Services Company celebrating a recent IPO at the NASDAQ. It is NYC Pride, celebrating Pride Month.
Yes.
Jim?
Yes, very good.
As we didn't really talk about.
All right. We got ourselves some red candle on Tesla. Almost at zero here, losing that 175.60 line. Not bullish for Tesla. You've got a red candle coming in on the NASDAQ dues at 74 basis points. You do have a ride of the line on BTC 71.1. That's your omen for the day. Watch that carefully. Looks like the Qs continue to move down. GameStop's trying to go positive. ASML's at about 7% up. Tesla goes negative. It looks like it's going straight down to about 174.16. You've got Nvidia dropping. It's down to about 120. First 15 minutes of the day, though, are very hard to get a trend. I find it's a much more hit or miss if I trade in the first 15 minutes versus just wait 15 minutes. Sometimes it works well. Like you catch a trend early, feels so good. But the worst thing is like you catch a trend and then like the second you buy, it just reverses, and then you're a bag holder. So the first 15 minutes are I feel like glorious for creating bag holders. Super Microcomputer rallying up about 3.6% here as Hewlett-Packard rallies about 13, though it is sort of rolling over a little bit. ARM's trying to move up 1%, though we're also getting a red candle over here. Tesla now down at 174. Look at that, line to line right now, line to line. And now it looks like we're trying to break through the lines to the downside. Nvidia is also rotating down, coming off those all-time new highs there in pre-market at least. And I would say that's probably an all-time new opening at, what was the opening here? The opening was 1183 on the opening. Pretty remarkable. So again, as we look for direction, keep in mind we have data coming out. So if you're getting those trading fingers ready, just remember you've got S&P data coming out in 13 minutes. And then in 28 minutes, you have ISM services coming out. And what we found both Friday and Monday were that those data sets were catalysts for the trading day. And it was worth being careful with your trading as a result of that. It does look like Tesla continues to lose that 174.16 line. That is bad. That is not good. Ron Barron did not pump it up enough. Actually, he didn't pump it up at all. He did the opposite. Although I will say his video was boring. Sorry. Q's trying to figure out what direction they want to go today. Nvidia has potentially figured out that it wants to go up. Hewlett-Packard, though, I think people are pulling a Dell on it. Not the singer, but Dell. The Dell Corporation. Also rotating down today, we've got Vertiv to take a peek at. That one's actually up 2% today. How about Owlet? Yesterday, the sucker was up like 12%. Owlet, that's not Owlet, that's Vertiv. Owlet, it's up about 2, but that one also doesn't have much liquidity. Enphase looks like it's got some green candlesticks, and I've got Nvidia bobbing around. 132 on Enphase. Salesforce, a little bit of a red candle to start, but looks like it's also trying to rebound. Oops. Let's actually type that in correctly here. There we go. There's Salesforce. How's good old Meta doing? Yeah, Meta's up about 2%. Look at that, 490. You know, I bought the dip on earnings, and I was grateful for that because it kind of just went up since then. Look at that. It's just been the trend up since then. And I don't really like Meta, but I'm like, I don't know, that's a little too cheap. Okay, CRM, yeah, not a great pattern there for Salesforce. Let's see where we end up moving. BTC struggling on that 71.1 level. Tesla's now down a full percent. It's trying to bounce over here. I don't think I have another support until 170 though. Yeah, I don't. 170 is my next support on Tesla. Oof. Not so great. So then Qs are still trying to move up here. It's pretty impressive. And so's Nvidia. So ARM's moving up. Apple's up about 0.5%, though it's also rotating down. Carnival's giving up a little bit. Coin's giving up a bit. Supermicro moving up. Pump it up. Yeah, let's listen in over here for a moment.
Of course, we're watching Tapestry Capri, right?
Yeah, I mean,
FTC against that one.
Nothing particularly large. Obviously, some certain announcements of potential things. Back to your point on Family Dollar, 8,000 stores generated $37 million in operating profit for the current quarter, which implies each store made $4,500 in the quarter. Annualize that, each store makes $19,000 a year. I'm reading here from a note.
BTC's just gave up. It's about to give up 71K, and the Qs are red candling little hard right now. Tesla's trying to bottom there at 1%. I don't know if this is going to hold up with the Qs. 64 bips. I don't know. Yeah. Okay. No, it's still moving up on the AI plays, though. Let's go to ASML for a moment. Yeah, look at that. 7.3% on ASML. So AI still wanted to pump today.
It's a very similar story to what you just described.
Yeah, kind of wants to upset things in Philadelphia. Now, remember, he's not a Philadelphian. He went to school. He's a Washington guy. So that allows Wapner to like him, and it allows me to watch because he runs the Sixers, and he's got Wapner's team, the Commanders. And he's the coolest guy in the room, frankly.
Dollar Tree did talk a bit, Jim, about a soft Easter.
Yes.
Although a lot of notes today defending the consumer. Barclays' excess savings is still robust. PCE was largely about Amazon's spring sale payback, things like that.
Yeah, look, I think the most important one of the quarter so far is Best Buy. Because Best Buy is all about what's going to come out this week. You know, it's going to come out at Worldwide Developers. And it's the AIPC, which I would tell you is, David, the AIPC is lurking everywhere. 40% of them is going to go to Best Buy. But the AIPC is the biggest refresh in history. Because who doesn't want a PC they can't talk to and say, listen, book me at,
when do we start to, September is when the AI PC, and we're going to be able to talk to them, and we're going to get... or talk to it. Yeah. It's not a them. It might be a them at some point.
Absolutely.
It's not yet a them. It's
Buy
just
me,
an it.
position limit calls all the way up, GME.
And then do you ask the PC what it thinks about your decision?
Well, it's like when you go to ChatGPT.
I
mean, chat was down yesterday for about 2 hours.
Was it?
I was just suicidal. I mean,
really?
Yeah.
Stop.
What are you going to do? You want to like a narrative? You want to compare HPE versus Dell, right?
Right.
But you're going to just Google it?
No.
It makes you buy a Dell, and then it sends you to HPE for help, and then it sends you to 4 other sites that are completely meaningless, and then maybe you get it. But if you go to ChatGPT, it's got this really concise thing, much of which is right.
HPE is the S&P leader right now, up 11. And by the way, Jim, WWDC is Monday.
I know.
Another positive note out of Citi today about Apple China.
Boy, the Apple China note is very interesting because I've been doing some work. It's got the service revenue. Now, you have to understand that if you go on the site, Apple, they have service revenue of every single country. It does have the least service revenue because China does not allow them to do everything.
Yeah.
But it will still count. And it will help them very much. I don't care about the discounting because I only want the aftermarket. And this story of Apple continues to be a story, Carl, of the few analysts that didn't dump on it before. And they don't have it. But the man I'm waiting for is the guy who really got it right. Tony Sacconaghi. What does he think? Ahead of WWDC. And look, my hat is off to him. He got it right. It was that one moment that he could upgrade. He did it. He threaded the needle.
Well, you've turned a little bit on, turned positive on Tony.
You always say own it, don't trade it, but apparently you can trade it.
You were slagging that guy for years.
Well, I'm mercurial and arbitrary.
All right. Let's pop on over here. We're about 6 minutes from data. First data set.
From the pandemic, how do you view the U.S. consumer?
I think that there's a couple of things. In terms of talking about the impact of interest rates, I think we need to separate. The fact is that many homeowners were able to lock in very low interest rates and mortgage costs. Now, the downside of that is that there's probably slightly lower labor mobility because people are locked into their home, and the fact that if they were to move, the cost of refinancing would be high. In terms of the rest of the economy, where we are seeing those high interest rates having an impact is really in that lower end consumer. And they're the ones who are not yet in the housing market, for example. You're seeing businesses react, and that to me is really a good sign. So think about a McDonald's, which is really starting to cater their menu to a much more cost-conscious consumer. Now, I think that that's what we expect. You look at Walmart. Walmart has not only positioned itself well in terms of its retail physical footprint, it's also expanded its online offering and really invested into that so that it can adapt to this new reality. What you've mentioned, Target is another company, and I think Target is in a very difficult position, as you've indicated, because it's kind of stuck in the middle. You've seen a number of store closings there with leases that have got long tails on them. But I do think that, that Target can, with the right offering, muddle through this. But I think that, as you say, Walmart is probably better positioned.
What's your view for the jobs number tomorrow, Katrina?
Yeah, the AI plays are really running right now. You've got ARM just hit 3%, and I think Supermicro is moving on this Nvidia enthusiasm as well. But Supermicro U-turned right back down to 790. So feels a little toppy, honestly. Qs are just playing sideways right now. Nvidia is at 183, which is quite frankly a remarkable number. And ARM is just killing it right now. But I don't know how sustainable this is going to be. Palantir's up another %, but it's also sort of barcoding to the side. You've got Tesla's down about 1%. Looks like it bottomed out at about 172 and it sort of bounced there. But ASML is still up 7%, so leading to some enthusiasm there. Salesforce really isn't moving anymore today, so it feels like your movers today are Tesla, ARM, SMCI to some extent, although that's slowed, Nvidia, Meta. Those are some of your big movers today. Obviously, you want to watch BTC. Which has just fallen a little bit. You want to watch Qs, the triple Qs, just to see what the Nasdaq's doing, which is sideways right now. All right.
Struck down by a U.S. court. You won't get too much transparency, or as much transparency maybe as you would have there. We're going to break it all down for you. Coming up, we're going to talk about deal making picking up in private equity.
The deal flow in the first half of last year compared to the first half of this year, there's clearly a pickup in activity. There is also pressure on asset managers and sponsors to realize assets, to distribute money back to investors.
All right, we're live at the Super Return Conference in Berlin, Germany next. This is Bloomberg.
All right, whatever. All right, so Intuit's still down 561. Qs, we're about 2 minutes away from data here. And so this particular data that we're going to look at first, this is going to be ISM services. We're expecting 54.8 expansion and 54.2 on the composite. I wouldn't be surprised if we just sort of get something at expectations. Pretty benign, but a little hard to say. And then 1180 now on Nvidia. Boy, that one just keeps moving, huh? Yeah, Meta is also running. Look at that. 490 here. That's been a nice little run here at the open. Whereas Tesla just can't keep it up. I'm not sure if ARM's starting to top out now or what, but Supermicro did top out. That was a really rapid top out. So, look at Meta, man. Woo. Is there news on Meta? I don't think there is. but I will double check really quick. All right. So, Meta. Nah. Nope. Nothing really there on Meta. Just enthusiasm. A little bit of an omen, though, that you've lost BTC here. So not a very bullish omen. Not that some of these positions actually really care. There goes ARM. It's finally rolling over a little bit. I wonder how Vertiv is holding up. Vertiv is up at, it's up 3.3, and then Hewlett-Packard's up 15, bouncing back up. Here we go. Services composite is pretty much exactly on expectations. 54.8. The expectation was 54.8 for services PMI, and then the composite was 54.5 versus 54.2 I expected. So that's actually decent. No, and then your next one is going to be where we could potentially see an inflationary impact, which would be the ISM services, and that one comes out in 15 minutes. So stay tuned for that. But that didn't look bad. So, yep, hence you're getting a little bit of a green candle there on the Qs, although probably not very substantial given that we're still waiting for ISM services. And I think once you clear these catalysts today, then you could finally, be convinced of a direction, if you will. And that direction right now on Tesla is down. It's really having a hard time keeping it up right here. So I'm watching this one pretty closely. And then I just keep watching Meta run. The thing that's so weird is I don't exactly know why. It's going up because it's going up. I was reading a story yesterday about how a lot of fundamental analysis today is driven by price movement. So like the stock goes up and then people find a fundamental reason to justify why the stock is going up, and then the stock goes up even more. And it's like backwards. Like it used to be that you do fundamental analysis and then you buy and then the price goes up. Depending on which side of the bet you took. But it's almost like fundamental has turned into like a dirty word for justifying. It's an interesting point of view. Because Meta and GA4 partnership and unskippable ads. Oh, really? See, I didn't see that. Meta unskippable ads. Sounds great for the user experience. Meta tests news unskippable ads on Instagram users. Meta is testing unskippable ads in the Instagram feed. Are you freaking kidding me? Oh, no. I have it deleted, so really don't care. That's crazy. Yep. Ad break. Can't skip ads anymore as you're scrolling. You know what? All the more reason to uninstall these apps. They're a waste of freaking time. Like how much you could spend an hour scrolling and then after it you look at yourself and like, what did I just get done in the last hour? Nothing. It's so bad. It's so addicting. That's why I just delete the apps from my phone, and then I'm not tempted to go on them. I use the browser on my phone to go on TikTok. So not on TikTok, on Twitter, X. And then I just don't go on TikTok or Instagram or YouTube Shorts because it's just like, oh my gosh, I can't get anything done, man. It's so bad. What's going on with ME stock? I have no idea. No, it was re-uploaded course. Just go to the channel and you'll see it. Oh, 23andMe buyout rumors. So you just have to wait for confirmation of whether or not there's going to be a buyout or not. HPE topping out a little bit. The Qs are happy after that information. And then Meta's topping out right now. BTC still a bad omen on BTC. Holy smokes, though. Look at Nvidia. Oh, my lordy. It's about to hit 1190. Oh, my lord. Whew. It is too hot to handle. Oh, Nvidia. Dang. It's just crazy. Tesla's now barcoding in the middle of freaking nowhere over here, which is not great. 11 minutes away from the next data set. Enphase doesn't care today. What's going on? Did rates not move at all today? Oh, Bank of Canada. What do we have here? Bank of Canada. Bank of Canada lowers interest rate to 4.75. Continuing evidence that underlying inflation is easing. Recent data have increased our confidence that inflation will continue to move to 2%. Shelter price inflation remains high. Wage prices remain but look to be moderating. Governing Council is closely watching. Wow. Canada cuts. I mean, that was widely expected. But go BOC. BOC cut-a-doozles. But 10-year Treasury yield's only down 2.6%. Hewlett-Packard's topping out. Vertiv's topping out. Like, how do you play that on the Qs? It's a sideways bar chart. You've seen that before each of the last 3 days. It's just been days for puts. Meta topped out at about 3%. Qs are getting... I mean, Nvidia's trying to hit 1190 here. Tesla keeps its bleed going. No, I can't bet on Supermicro or ARM rallying. You can really only bet on Nvidia rallying right now, but at some point that's going to pop. I don't know when that is. I wish I knew. If somebody could just tell me the date of the top for Nvidia, I would be grateful. Ethereum's trying to rotate back to 3764, just breaking under 3800. And yeah, we're really, ooh, nice red candle there. Waiting 10 minutes now for ISM. And yeah, still a bad omen there on Qs. Reject at 1190. Basically an 1190 reject there on Nvidia. Yikes. Ow, burn. Oh no. Oh no. Oh no. Oh no. It's not good. Is it gonna go for it again? I don't know. All I know is I'm waiting for data. I got 9 minutes.
Maybe non-tech related. Hasn't really been coming to market. It hasn't really been valued by fundamental investors. Has something changed?
You know, I think there's a lot of analysis to be done on how the 2021 vintage of IPOs has performed, because it was such a bonanza in the IPO market. And what you realize a few years in is that people...
Can you do it? 1189.86. Come on, baby. 1190. Come on. Come on. Break through it. Oh. It's coming. There it is. There it is. There she blows.
Don't you know, pump it up. You got to pump it up. Don't you know?
Wow.
You got to pump it up.
Okay. That's pretty incredible. Looking for 1200 as the next stop. It's right up here. And yep, that's taking ARM up with it. Look at that. As soon as you broke 1190, you pushed ARM. And the Qs are going up on that. Even Tesla's recovering. It's like as soon as Nvidia broke 1190, it was A-okay for everybody to rally again. Everybody got a green candlestick. You get a green candlestick. You get a green candlestick. You get a green candlestick. Wow. 85 bips on NASDAQ. 100. Sitting at 1192 now on Nvidia. Oh, lordy. And Tesla's trying to get back to 174 over here. Wow. ASML's 6.5. Wow. You can really dance. You got ARM at 439. All right, all right. 7 minutes until the next data. It's your caddy. What's the caddy gonna do? Is that pickleball? Let me go over here.
We're still committed. We're constructive on that market. We're seeing great investment opportunity. I think it's just another layer of risk management that we have to take into account in our underwriting.
You've pulled back a little bit on deal making, or?
A little bit. I think in certain sectors, there's some binary risk that's hard to measure, right? So certain pieces of life sciences, certain pieces of high tech, we've had to pull back a bit.
Also with environment.
1193.81 is the local top for Nvidia. Will it come back to defeat the local top? I don't know. I do not know. I have no way to know. I don't know. Sam I am. Let's see what happens. Yeah, Tesla reject at 174 over there on the candle wick. And we are now 5 minutes away from data. Data. Okay.
It's not like Dell. I mean, they have proprietary products that make it so that Jensen feels they're strong. This is a very important quarter. It's a breakout quarter for them, and it's not reflected enough in the stock. Now, CrowdStrike, on the other hand, had another amazing quarter. They attacked Microsoft throughout the quarter, throughout the whole conference call. One reference to an attack on Broadcom, but they crushed the number. They've never missed a number. And what can I say? They are the cloud native, and they do a lot of great stuff.
And you've got him this evening.
I got George Kurtz, who really, to me, has become the most bankable person in the room. And then I've got Sridhar Ramaswamy. Now, Snowflake's been a bad stock ever since Frank Slootman left. And we got to see whether they can turn around. I had Databricks on last night. They're a real competitor. And I like the Databricks. They're private. But there's a lot going on in this space. I am exclusively devoted to Jensen Huang and nothing else.
What does that mean?
No, I'm just being... He's like Elon Musk at one point. The more you talk about him... My wife priced out the jacket.
Yes.
She said you can't get it for less than $1,000.
What, the jacket?
G. It's a G.
That sounds about right. I think my leather jacket was like $900.
That he visits in Taipei after he's gone because they just want to be where he ate.
Well, I mean, when I was at his headquarters, been there a bunch of times, there are people, employees who want selfies with him. I mean, employees. We do not have a lot of CEOs in the country where employees want selfies. Right? Most of the CEOs are not recognized in this country.
Topping out a little bit there on Nvidia.
35 million, because that's what you're supposed to make if you're a CEO. If you don't make 35 million, you know what? You don't know what the hell you're doing.
You can't live on less.
Yeah.
Can't. And by the way, don't forget, you got to have the use of the jet at all times.
I got to go buy some sushi.
All times.
I got to go buy some sushi swap and some osmosis.
You go do that.
We'll see you at 6, Jim. Mad Money, 6 p.m. Eastern
What a
time.
show. Hey, Gary, see you later.
ISM Services when we come back after a break.
Yep. All right. Oh, boy. Yeah, Jensen signing bras was really interesting. Nvidia tops out at about 1194-ish. Looking at Tesla still struggling to figure out what it wants to do in life and, what it wants to do when it grows up. But, yeah, this is really interesting. Don't y'all know? Pump it up. The pump's been pumping. That's for sure. Anyway, there goes Nvidia trying to get green candle again. As a result, you're getting an ARM green candle. Duh. They're just like derivatives of each other. Don't y'all know? All right. Well, I don't really think there's anything entertaining here happening until we get this data, and then I need to go make some more coffee because I'm dead. What is this? Small caps, Hewlett Packard's 14, Virtus, boring. Boring. It's all boring right now. Come on, hit that new high. Break it, Nvidia. Break that all-time high. Come on, baby. You can do it. 1193.81 is what you're looking for. So you really want to see it go to 1194. You got 3 minutes before the data comes out for it to show us who's boss. Might do it. Let's see here. Okie dokie. It's trying to. And then it looks like Tesla's recovering a little bit as well. Yeah, you're trying to recover on Tesla. But still about 90 bips down. Surprising. I don't think there was really any particular news. It's just been a tough one for it. Here you go. Come on. Come on, baby. And then I think, yeah, AMD, is it going back to the 165? Yeah, it is. Yeah, look at that. It's actually breaking out of the 165 right now. And then Meta gave up some of its run. But, yeah, AMD really pushing up here. Into the close yesterday, it was running as well. I almost bought AMD calls right into the close yesterday, but I convinced myself not to. Oh, well. Here it goes. breaking that 165. It's probably, yeah, aligning here with Nvidia trying to break its high. Go AMD. All right. Data's out in 30 seconds. Dun, dun, dun. Dun, dun, dun. All right, here we go. Don't y'all know? Oh, pump it up. We've got to pump it up. Okay, so a bad read would be weak services and higher inflation. So we're looking for 51 for the services index, and then prices paid 59. So if you get like 60 on prices paid, and then like 49 on services, it would be bad. Here it is. And okay, we get a beat on services and weaker prices paid, which is actually good. It's a good thing. So 53.8 on services. Prices paid come in at 58.1, weaker than expected. Employment comes in at 47.1, a little weaker than expected. And services new orders come in better than expected. So services index and new orders, those both came in better than expected. So it's actually decent. Now, why it's turning red? I don't know. That's why the market is what the market is. It's like, catalyst is gone. Sell everything. The numbers seem fine to me. Those actually seem like decent numbers, but whatever. Maybe I'm missing something. Well, let's listen to the CNBC then. Oh, they haven't even covered it yet. What is this? Come on, baby, cover it. Cover the news, would you?
The trading session. Here are three big movers we're watching. Number of consumer-facing names reporting results. PVH, Campbell Soup, Dollar Tree, Ollie's Bargain Outlet, more. We're going to bring you the headlines this hour. Shares of Hewlett-Packard Enterprises popping double digits. Top gainer on the S&P 500 right now. Beating on the top and bottom lines after AI revenue more than doubled from the prior quarter. We're going to be speaking with the CEO of Hewlett-Packard Enterprise, Antonio Neri, later this hour. And watching Apple today, aiming for its 8th straight day of gains, just inches from its highest close of the year. The key level to watch there, 195 and 18 cents. So actually, we are surpassing that right now.
Looks like we got a solid ISM services. Let's get to Rick Santelli.
Yeah.
Morning, Rick.
Yes, solid.
Okay, maybe we just needed CNBC to pump the stock market.
For the headline services ISM PMI index. Why is this such a big number? Because in the rearview mirror, we have 49.4. Not only was it under 50, it was the first time in 15 months under 50 since Dece of 22. So a nice reversal. 53.8 becomes the best level since August of last year when it was 54.1. Now, if we go to the prices paid, 58.1. So that's less than expected, definitely less than 59.2 in the rearview mirror. And 58.1, well, it is the lowest level just since March, and that is one of the issues. It was 53.4 in March, so even though it definitely reversed from 59.2, kind of been there, done that. On the services, on the employment index, which is important given ADP disappointed a bit, and Friday's, of course, the big jobs report, this remains under 50, 47.1, a sequential improvement, but still remains under 50. And finally, new orders, sequentially higher, 54.1, 54.4 was March. So once again, the comp doesn't go back much, but it definitely was an improvement. To summarize, it certainly seems as though the prices paid number will be scrutinized a bit, and most likely why the services number being strong, both those combined, not getting much give back on the rates on this particular data set. Sarah, back to you.
Yeah, important, I think, to see the prices paid come in below consensus. I will take any better inflation print. Thank you, Rick.
Exactly.
Rick Santelli.
You did just get Nvidia break its all-time. So on this good data, the data was good. You got to give them that. As I said, I told you what would be bad, and we got the opposite. Now, does that mean we're not going into a recession, good sir? I have no idea. But what I do know is Nvidia wants to pump it up all the way to about 1,200. Don't you know? So we'll see what happens there. And then that's pretty remarkable. That is pretty remarkable. Tesla just tough time over there on Tesla right now. Qs, a little bit of droppiness there on the Qs. Remember the last 3 days what you had, and we kind of called it going into yesterday, which was either downward consolidation or sell-off at the beginning of the day, and then rally towards the end of the close. But the rally towards the end of the close came like an hour before the end of the close. It's really interesting. And it was brief, too. It was only like a 45-minute rally, and then it was over. And then it sold off right away again. It was just crazy, weird market. All right, so finally curving out on Nvidia. And Tesla's still trying to find life. BTC omens slightly negative. SMCI can't keep it up. Salesforce can't keep it up. Enphase is trying to get it up. Oh, GameStop just came out of nowhere. There goes GameStop. It's up about 8%. And it started, I'm pretty sure, flat. So, Palantir 1. I wonder where GameStop's trying to head. Let's take a peek at that quickly here. So if I go GME, probably the 30s over here. Yeah, I got a 30.57. Although it seems to have a problem here at this 28.64 number. So we'll see what's going on there. Okay, a lot of stability though. Sideways the Tesla, sideways the Qs, ARM's trending up with Nvidia, AMD couldn't break out, Owlet's given up, Hewlett-Packard's starting to bleed, Bitcoin's bearish, ASML's stable. Boring. Yeah, Greenwave Technology, GameStop moving. CrowdStrike's only up 4%. Wow. I thought it was up like 10% at the open. Yeah, it just bled out. That's interesting. And then you get some momentum movers over here. Okay. Boring.
It doesn't point to recession,
Where
although...
are we on GDP now? I mean, that's dropped.
The Atlanta Fed GDP tracker has come down a lot, but is still above 2% in terms of where it's tracking growth. We're not at recession levels, and even the jobs numbers, even if they're cooling, first of all, we're expecting almost 200,000 jobs added in the month, and still an unemployment rate around 4%. We're still below that number.
Right.
So it's not significant stress. It's sort of the natural lagged impact of higher interest rates and higher inflation rates. And it's something you hear across the companies in terms of the commentary from consumers. Ollie's Bargain Outlet, for instance, we picked out this quote from the CEO saying, consumers clearly remain under pressure and are seeking value when making their purchases. We continue to benefit from the trade-down effect we have experienced over the last few quarters and are seeing strong retention from this customer cohort. Trade-down is a phrase that I heard from Campbell Soup CEO Mark Klaus. I just got off the phone with him. They're benefiting from their Sovos acquisition. That's the Rayo's sauce, tomato sauce, which is helping them lift guidance. But Mark did note that during the quarter, they saw snacking slow down, and it's because low and middle income consumers were either trading down to private label on things like pretzels and chips, and we're just being more cautious and spending less. Snacking's been such a strong, resilient category, and they're starting to see that. He expects that to continue over the coming quarters before it returns to growth again next year. And then on the high end, too. You know, luxury's been pretty resilient, but we had the Saks CEO, Mark Metrick, at the CNBC CEO Council yesterday, and here's what he says he sees right now.
You have the emerging luxury consumer, and I think that's where we're seeing the pullback. And I think it wasn't as much the fact that they're worried about interest rates, or they're worried about the stock market, or they're not worried about the stock market, depending on the month. It's more that things have gotten a bit more expensive. Yep. Okay, and that's normal in luxury. Inflation in luxury is there. Okay, that's not like eggs or milk or gas. This is something that it happens every year. It's also their lifestyle. They're taking Ubers now. They're getting blowouts again. They're doing all the other things they weren't doing. So we're seeing that goods services flip in, and that's where we're seeing the pullback.
The pullback is in the emerging luxury consumer, he calls it, not the core luxury consumer. And the way he defined that is the core luxury consumer is someone who wears Brunello Cucinelli to walk their dog. And the emerging luxury consumer are those that are treating themselves to Brunello Cucinelli. He also said Ozempic is actually. He
My
said,
gosh.
I thought of you because I know you're interested in the GLP-1 stories.
Oh,
but
I thought you were going to say,
no,
'cause
no,
I know
you're not on. You're not on
Ozempic. No, I'm
Ozempic.
not.
But that it's been very good. It's a tailwind for the business. And I said, why? Because people have to switch sizes? No, because they feel better. And they want to go out more. And it's like a whole different mentality shift.
Really?
Yeah.
Well, also
Makes
they
sense.
feel more trim. They want to wear something that
Wanna
fits
look
them
good.
well. They
Yeah.
want to look good. Yeah, it's all part of the same thing. Sure.
So a tailwind despite the slower economics.
Meantime, more on what all this data means for the Fed and the road ahead. Our Steve Leisman's here to talk about that. Steve, as we've got now Canada waiting on ECB, JOLTS, ADP, ISMs, all in the bag now.
Yeah, I think it's amusing, and I hope you guys are amused too, how every report is an inflation report. Nobody cares how service sector is doing, how jobs are doing. It's all, what does it mean for inflation? What's it mean for the Fed? So take a quick look at ADP. It's been going along pretty good, along with the government's private sector job report. Had a big blowout in June that wasn't verified. That's the big spike on the left there. But it's not done a bad job predicting where it is. And that suggests maybe the private sector this month will come in a little bit weaker. And then you take a look at what that's meant for probabilities. David was talking about, David and Sarah talking about the slower data. All of that is seeped in to the outlook for the Fed. And take a look at two things I want to show you now. First is the change in probabilities. They're down a little bit after the ISM report this morning. We did update them, but they were a little bit higher. But they're all up from, say, last Friday as we've gotten what data we have for the month of June has come in, or for the month of May has come in on the weaker side, and so that's raised those probabilities. One other chart I want to show you is the probability of that second cut. So we were able to dissect this data and say, what is it saying for November and December? Low probability for that second cut in November, but it rises to 2/3 right now for December. So that's where we are, guys. All of this has come in. And then I asked the question whether or not, hey, is this finally the end of that period that we've been in, the historic part of it where, all right, finally they're done hiking, they're done staying higher for longer, and now we get a few rate cuts from Canada. Tomorrow, does it put pressure on Powell?
Then, Steve, as far as NFP goes, I see Goldman sticking with 160. I know Feroli at JPM's at 150. What number does connote job creation, given supply?
Well, I mean, I think that the 150s, 160s is still a good number, but remember the average is 190 right now. So, and I've seen some 200s out there, and part of that, by the way, I think we'll take with a grain of salt, because what we're looking for is a restoration of some state and local hiring that took a dive for reasons unclear in the past month. So that'll come back a little bit, and we'll look at the private sector, and I believe we'll see some slowing out there to a still good. But I will say this, you asking Sarah about the soft landing. I've been thinking about if NASA was giving advice to the Fed, what they would say is, if you want a soft landing, you have to deploy the parachutes. And you got to do it before we hit the ground. So that's my advice.
Is that now?
Parachute?
What are you saying? Like July? Are you July?
I'm saying the parachutes are rate cuts, and
June
I think
cut?
there's enough slowing out there that might suggest, if the ECB can do it, aligned with the Fed on the on inflation, they're not far off. Canada can do it; their inflation rate's not too far. I think there might be worthwhile to, put the parachutes out if you want to guarantee that soft landing.
It's a good debate. Their growth isn't as good as ours, though.
No, fair enough, but we've had a good decline, Sarah, in inflation, with growth remaining quite a bit higher.
Yeah. Atlanta, by the way, is at 1.8.
Yep, GameStop's went right to, look at that, almost exactly to where I was talking about it. 30.57, it went to 30.28. Wow, what a run there. That was another 5% from when we noticed it there. That's crazy.
The market didn't react to rates coming down in the 10-year recently until today.
Mm-hmm. I mean, you talk to some real estate folks, there's concern there about the knock-on effect of that into the banking system. We've seen real incomes come down, real spending in the prior month was down, was actually negative. So I think there's enough here. The Fed can take out some insurance and not and guarantee the landing and sort of allay some of those concerns that are out there.
something for viewers to ponder. Steve, thank you. Steve Leisman. Meantime, it is being called private capital's most senior gathering. Our Leslie Picker's there in Berlin talking to some top investors. Morning.
All right. It does look like you've got GME's trying to push that breakout there. I don't know if it's going to actually be able to pull it off here. And then we'll see what happens. Okay, so then we've got the Qs are barcoding sideways at that about 457 level. Then you've got BTC 74.4 and hold on, let me see here for a moment. What else here? Commercial real estate. Okay, I want to hear it. Hold on.
I think CRE is kind of on its own and needs to fix itself. And, you know, we think that this cycle is going to look more like a traditional distress cycle used to look before you really saw this kind of central bank intervention of the past two cycles. And what does that mean? That means it's going to take a few years to process through. It means that asset prices for commercial real estate, maybe they've leveled out, maybe they're not going down, but we certainly don't think they're going up over the next year or two either.
So does that mean you think it's bottomed?
I mean, maybe we're close to the bottom. I could definitely still see a little bit of downside as some of the product that the banks hold today actually comes to market and gets sold.
Yeah, okay, whatever. That's why I heard that in, when I started in real estate. Oh, the second wave. The banks were going to dump everything, blah, blah, blah. Okay, so you've got GameStop here. Solid rejection right there at that 30.57 line. I mean, it's just the lines. You gotta trust the lines. It's just always what it comes down to. I don't have any lines here on AMC, but I know 5 has been always a big price for them, and they almost always fail their breakout at 5. Tesla's trading sideways. The Qs are trading sideways. Nvidia is now trading sideways. ARM legged up again. BTC has rolled over on the 71.7 line. It could reverse up, obviously, very quickly, but it's been on this trend. This is the 5-minute trend, mind you. And so on the 30-minute trend, you're down as well. So the trend right now in BTC is down, but it could reverse any moment. You get these on the 1-minute candlesticks. Obviously, you're going to get volatility, and so are you on the 5s. Then you've got Coinbase down about 1%. AMC, GME rolling over just a bit. Snowflake's down 5. The Qs are sideways. Tesla sideways. Yeah, this is no news here. So, there goes AMD. AMD still trying to break out of that pattern. Looks like they are. I don't know if they'll be able to hold on to it. Enphase sideways. Apple. What do we got here on Apple? There we go. 64 bips. What all-time high is 199? So watch that. Etsy's not really moving. Chipotle. Ethereum. Ethereum's rotating down a little bit as well. A little bit of a BTC move there. A little bit of a bounce there on BTC finally. And yeah, otherwise somewhat sideways right now. So sort of just waiting and seeing, I guess. The good old wait and see. All right. And the Doomers have anything for us? I don't know if the Doomers have anything for us. Let's see what the Doomers got.
Stock exchange. I mean, what is the potential vision here for the business?
Oh yeah,
in terms of
the stock exchange talk. We talked about that already a little bit, but let's hear it.
That would go to NYSE and NASDAQ, but might be frustrated with some of the new rules and regulations, the compliance that is put in place. Think about NASDAQ's board diversity program that they have put in that might limit some companies that don't meet the certain threshold that is placed for listing on NASDAQ. If they still want to go public but don't meet the threshold they might choose the Texas Stock Exchange. That is really what this business is targeting. They want to be an open venue that has less rules, less restrictions than NYSE and NASDAQ. They're going to really promote themselves as the welcoming Texas state that is welcoming to companies that might not want to go through the hurdles that they would see in New York.
And I mean, this news is interesting in and of itself, but also interesting are some of the backers. Like we said, Citadel, BlackRock, among the investors here. What could be the bet on their part? Are they trying to hedge something here?
So this is not the first time that we've seen market makers like Citadel, Virtu back exchange operations. In 2019, the members exchange, Memex, which is still up and operating, they, along with some of the biggest banks, backed their new exchange that is, again, still in play, and they are taking market share from some of the big incumbents. And we've seen Howard Lutnick's futures exchange that is to launch later this year. That is not in equities, but in futures. But again, this is a big play for participants that might just want more venue, more choice. And there's also sometimes a financial incentive when you are a backer of the exchange. You might get actually more of the ownership in the exchange if you send more volumes to that venue.
All right,
sure, yeah, and I think you need to have like a pretty diversified ownership group to actually own an exchange. It can't sort of just be like one party. GME is still getting rejected there at 30. It's now down at about 29 bucks.
To U.S. exchanges in pursuit of better returns. For more on this story, let's bring in Bloomberg's Crystal C., one of the authors here. And what's the logic, basically?
The very simple thesis here is valuation. If you look at the valuation on a price to earnings basis, the FTSE is lagging by about half of what the S&P is trading at. So valuation arbitrage is what some of these investors say will be beneficial. There's also an argument of better liquidity in the U.S. markets, just like what Catherine just said. Their liquidity is almost the most important thing when it comes to trading, whether your investors can easily get in and out. And the most important thing here is that this is not just Third Point pushing for this, not just Dan Loeb. There are a host of activist investors, including Sevian.
Boring. Don't say it. I don't care. They're boring.
That's
Nvidia's
right. Well,
back
there's sort
all-time.
of we see sort of
sitting at that 1194 level. That's the level they really got to break here.
economic times are difficult of around 4 million unit, given our demographic profile, and we're right around that for existing homes. Now, listings have come up a little bit. They've gone from about 3 months supply to about 3.5 months supply. The number of houses has also been rising on the existing home side.
Are you seeing anything reliable in the cracks of, say, asking prices in Austin or parts of Florida or other areas of Texas?
Well, you've definitely seen a pickup in the listings in both of those states. I actually live in Southwest Florida, in Cape Coral, which I think has had the biggest percentage increase of existing homes for various reasons. Insurance rates, for one thing, because Ian visited there a couple of years ago. That actually destroyed a fair number of homes, which are all being rebuilt. So there's a lot of new builders in that area. So supply is coming up there. Some people are revisiting as, do we want to stay here for another hurricane or whatever? But it's still a pretty good market. The listings that are coming on the market are usually aspirational, and then you'll see a little bit of them relisting at a bit of a lower price.
And that's why we're getting a tick up in some price cuts.
That's right. That's right. A little bit of a slowdown.
What was my other question? Are you worried about rates impacting the longer-term pipeline of multifamily, let's say? Things to worry about in 25.
Yeah, actually, there's about 500,000 units that will come on the market this year in the multifamily. Austin is a poster child for that. So that is holding rents down below the rate of inflation. We think maybe about 1.5% appreciation this year, and inflation's running at about 3%. But the other thing that's happened is the rise in funding costs for the multifamily builders has suggested a big drop-off in construction. So starting maybe in 26 or 27, we might be hearing lack of supply again on the apartment side because of that adjustment in the cost of construction.
Overall, are you optimistic we can get to the 6.5 magic?
Our forecast doesn't have it this year. It does have it next year. We think that when the Fed gets inflation to where they want it and they start to ease, what we're telling mortgage companies is looking ahead, if you're budgeting, I would say over the housing cycle, and there is a cycle, mortgage rates are likely to run from 4.5% to 6% with a median of about 5.25%. That's kind of what I would be thinking of where the sweet spot for a normal, quote, housing market would be, something in that range. One thing to note, the first time that when mortgage rates passed 7%, there was a little bit of a pause in the new issue mortgage-backed security market because investors did not believe that MBS would still exist when the Fed eased. So what you saw...
Ooh, nice little pop there on the Qs. Holy smokes. Look at this. Everything just popped up right there. Almost everything just popped up. Wow, look at that. These are the Qs, just went up to about 94 basis points. Nvidia just popped to 1196 breakout. See that consolidation you had right here? Consolidation, breaking out on the right side. Tesla's recovering pretty well here. Enphase just got some volume as well. ARM just pumped up even more. BTC's recovering off its floor. Went down to 73.92. Coin is sitting right here at this 244 line. Is it going to be able to hold onto that breakout? That's a pretty important line right here to pay attention to. And then we've got AMC, GME trying to find a spot as they're consolidating a little bit. And wow, what a run there on the Qs there. Just almost out of nowhere is what that felt like. I think that's because you're about to hit Nvidia 1200. That feels like what you're trying to push. Nvidia 1200. That's crazy. Let's see if we can do it here within the next few minutes. That's pretty wild. So then you've got, again, Qs. Well, actually, nope. Qs just hit 1%. That's really bullish, and that's interesting given the sort of the original bearish omen you had on BTC, which is now following the Qs, actually. A little bizarre, but very well. So look at GME here, also trying to push up. There goes BTC at, what are we at, 70,700. And this is what everybody's watching right here. It's that Nvidia move. Is it going to hold? Go for 12. 198. Come on, pump it up. Got to pump it up. Don't you know? I don't know. It's a pretty big psychological barrier there. Tesla. Yeah, that's a pretty critical line for Tesla as well, the 174.16 line. Where's Nvidia? There it is. That's what I'm looking for. Here it is. You're within $1.50-ish. Almost there. Yeah, Tesla got rejected. Enphase is now rotating down. Nvidia's obviously still running. GameStop's trying to pop back up to 30. Remember, it was like the 30, 50-ish level. That was a rejection point there. Come on. Can't get it? Can't get there? Fine then. Yeah, Q's topping out right here. BTC, this is on the 5-minute, still moving, though it's starting to pop a little red candlestick right here. And looks like now, let's see what the Doomers have. And are they saying anything? Nope, they're on commercial. Losers. Okay, GameStop's coming. AMC. Well, BTC still got that red candle. And the Q's topping out at about 1% there. Can't really get to that push over on the 1200 on Nvidia. Still at about 5.2% though on ARM. And then AMD keeps pushing as well. So AI is pretty dang optimistic today. Pretty optimistic. And it's going to push it. Almost up 3%. It's remarkable.
Good to see you, David. This is the annual conference where the heads of all the exchanges like NASDAQ and ICE, CBOE, or various trading platforms like Robinhood and the market makers like Virtu, they all get together to talk about trading trends. How's the business? So here's the big topics. First is the macro setup heading back into the back half of the year, especially with an election coming up, just how much volatility can be expected, and it's going to go up, volatility, as we get into the summer. Second, what's the pulse of retail trading? What's the latest data, for example, on this explosive growth of trading in options and futures, particularly zero data expiration options? Third is this whole mini meme stock rally that we've seen. That's getting a lot of discussion this morning. How does it compare to 2021? Has customer behavior around meme stocks changed now that this is the second time around? And the general feeling is behavior has changed. Fourth is the whole...
Nvidia's Tesla's recovering. It's only down about 0.5% now. NASDAQ 101. Snowflake's still bleeding. And you're watching GameStop get back to 30 there, with Nvidia still stuck at that 198.
Platforms expanding investment opportunities in companies that are still private. So getting into private equity is another way they're trying to expand as well. Finally, I think the industry's response to increasing regulatory oversight. Remember, SEC Chair Gary Gensler has been actively hostile to many trading platforms and also to crypto as well. Virtu CEO Doug Sifu has been particularly vocal about that. We'll speak to him on Halftime Report. That is coming up at 12:35 today. Finally, CFTC Chair Rostin Benham is giving the keynote address. He'll likely be addressing climate change and environmental contracts.
Boring. All right. Oh, yeah, this is all boring now.
Distributors in America.
Yeah, we got our catalyst. I'm pushing the button. I gotta get some coffee. I think I gotta make 2 coffees. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Well. Let's see what happens. Is that BTC recovery going to continue to hold? Once you breaking this 71.1 line is pretty important. Coming up on 71.8 here will be another little test for BTC, but honestly, with the Qs running like this, looks like it might be able to get back to 71.70, especially 71.1, especially with that pump there on Nvidia. As far as ARM, that's just following Nvidia. It really feels like an AMD. It really feels like the market is following Nvidia right now. Especially since look at that Qs move. Holy smokes. From sideways to breakout this early, that's already different from what we saw Friday, Monday, and Tuesday. Anyway, we'll see if it ends up being a fake out. Oh, there it is. Oh, look at that BTC pump right there. Ooh, that's pretty nice. Look at that. That broke right through that test point right there. Let's see if it holds, or is it a bull trap? We shall see. All right, folks, thanks so much, and we'll see you on the next one. Bye.